Okay, so let's have a look at a simple net cash budget. So in this budget, we have our figures from our total expenditure. So we would have looked at that previously and calculate our total expenditure when we'd have maybe somebody's salary, the child benefit that they get, and any interest on savings. So these figures here are all the totals taken from your total income. So we have 3,000 in January, 3,000 in February, 3,000 in March, 3,000 in April, and the total then are these four figures added up. Your total expenditure then is taken from your expenditure budget. Now remember, your total expenditure is made up of your fixed expenditure, your irregular expenditure, and your discretionary expenditure. So those three figures added together will give you these figures here. So in January, you've got 2,000, February, you've got 2,300, March, you've got 2,300, April, you've got 2,800, and our total then are these four figures added together to give us 9,400. Your net cash then is the money you've left over at the end of the month. So it tells us here A minus B. So A for January is 3,000, B for January is 2,000. So 3,000 minus 2,000 will give you 1,000. Same then for February. A minus B is 3,000, B is 2,300. So A minus B gives you 700. March then. Net cash, A minus B. So A is 3,000, B is 2,700. So take one away from the other, and you get 700. April then, A minus B, total income 3,000, total expenditure 2,800. So your net cash, A minus B, 3,000 minus 2,800 gives you 200. And then your total then is your total income, which is A, 12,000, B, 9,400. So in your calculators, put 12,000 minus 9,400, and you get 2,600. And that's how you get your net cash. A, your total income, minus B, your total expenditure, gives your net cash. Your opening cash will usually be given to you in the question, and your opening cash is how much money we're starting January with. So in January, our opening cash is 2,000. So we got our net cash in our bank of 1,000 at the end of January. We started with 2,000. So at the end of the month, our closing cash is going to be 1,000 plus 2,000. It's going to give you 1,200. Now your closing cash for 1 month is your opening cash for the next month. So if we started January, 31st of January with 1,200, and the next month we started February, we're going to be starting with 1,200. So your closing cash for 1 month becomes the opening cash for the next. So your opening cash for February is going to be 1,200. We've got 700 then left over from February. So 700 plus 1,200 gives you 1,900. So your closing cash is 1,900 for February. Then your closing cash for 1 month becomes the opening cash for the next month. So closing cash for February is 1,900. Opening cash is 1,900 for March. So we started March with 1,900. We finished with 700. So what do we have left in our account? We're going to add these two together to get your closing cash. So in your calculators, put 1,900 plus 700, and that gives you 2,600. So remember, closing cash for 1 month becomes the opening cash for the next. So 2,600 becomes our opening cash. So our net cash, or the money we've left over at the end, is 200. We've got opening cash of 2,600. So our closing cash then is going to be 2,600 plus 200. So our closing cash is going to be 2,800. Now this is our total column, so we don't bring that into our total column. These are for the months. So our total column, our opening cash, is going to be what we started with. So we started January with 200. So your total column is going to be 200. So don't get mixed up with that. Don't bring the 2,800 up here. It's this opening cash we have, because this is our total column. We finished in the months. Now we're looking at our total column. So kind of back to the start with our opening cash at 200. So we're going to add 2,600 and the 200 together, and you get 2,800. These two figures, the total column and April, or the last month, these two figures should always be the same, because if this is our total column, it should equal this figure here. So a couple of things. Your net cash is A minus B. Your opening cash will be given to the question, and your closing cash is where you add your net cash and your opening cash together. Your opening cash for the next month is the closing cash for the previous month. So the closing cash for one month becomes the opening cash for the next. So think about your bank account at the end of January. If we finished the last day of January 1,200, we're going to be starting the first day of February 1,200. And then your opening cash for your total always comes from your opening cash from the first month. And these two figures should always be the same. So that's a simple net cash. So to finish off the budgets, this is how you do it.